Welcome to another episode of Fearless Focus. I'm your host, Mimi Evans, owner-operator of Fearless Bookkeeping Services. Today, we're going to dive into a topic that is pretty heavy during tax season, which is spreadsheets versus an accounting file. I'll be honest, I would prefer if no one uses a spreadsheet, even in the beginning, to track their business expenses or their income. But I get it. It's free. You get an Excel book, you jot it down, and you're good to go. Until you're not. If you're making $75, $100, $200,000 top line revenue or more, you definitely need to be using an accounting file. One, it's going to raise a red flag with the IRS if your entire tracking system is within a spreadsheet. There's no confidence in the accuracy of that file. Even your tax preparer, they likely have zero confidence in it themselves. The reason for it is it's too easy to make a mistake. There's a reason that technology exists to a degree. It's not to take over what we do. It is to supplement what we do. So we use technology to help us. One of those ways is an accounting file. An accounting file you connect to all of your banks, and the bank fee is going to come through, and all of the transactions are going to come through with it. Not to say technology isn't perfect. There will be mistakes. But for the most part, you will get 90 to 100% of your transactions coming through. Now, where does this come in to help the average person? The average person that's making 100 to 200,000 is probably waiting until the last minute to do the tax prep. So at the end of the year, they're thinking about all the big expenses like their laptop, the camera that they purchased, and they're looking for the receipts and they're like, I think I bought it in March. It's March next year. And you're talking about March last year. You're going to have a hell of a time trying to figure that out. If you have a bank feed connected to an accounting file, then you can easily see when that transaction was, code it, and clear it. This makes it easier for your tax preparer at the end of the year as well, because they can easily see where your money went. They can find the mistakes and they can ask the questions that will help them provide a better strategy for you. The other thing is the small expenses that we miss. That $3 purchase at Amazon or $2 at Target. Maybe you spent a little $20, $75. Like, hey, look, I'm not judging. I get it. I love me some Target. And what I love even more is that when I get an accounting file, I can see exactly where the expenses are and I can ask the questions that need to be asked. I don't know what's missing with a spreadsheet. What you provide is what you provide. A QuickBooks file, an accounting file with your bank feed, I know what's missing. How can I tell? Because the bank statement doesn't match what's in the file. So then I can tell you what we're looking for. All of that to ultimately say, please stop using your spreadsheets and get a QuickBooks file, an accounting file, zero. Please. Your taxpayer, we will thank you. Thank you for your time. Make sure that you like, subscribe, and share this video. Click the link in the bio so that we can connect and learn more about each other.